Before we begin, we suggest using headphones so you can enjoy every word and detail with excellent audio quality. So, let's get started. Welcome to the summary of Rich Dad's Guide to Investing by Robert T. Kiyosaki. In this guide, Kiyosaki shows his thoughts and experiences on investing, helping you navigate the often confusing world of finance and work towards financial independence. By learning from his rich dad's lessons, Kiyosaki encourages us all to think about money and investing in a whole new way. In this summary, we'll dive into the key ideas, strategies, and principles that can help you build a strong foundation for successful investing. Introduction. We all know how important it is not just to earn money, but also to invest it wisely. Investing is the key to growing our wealth and becoming truly rich. By building assets through smart investments, we can create lasting wealth. Let's take a closer look at Rich Dad's Guide to Investing by Robert Kiyosaki. When it comes to managing money, there's no one better than Kiyosaki to learn from. The book breaks down the concepts into 33 investment lessons, making it easy to follow. Here are just a few lessons you'll learn. How to move from an average investor to a professional investor and become rich. The different types of investors in the market. The key qualities that make an investor successful. Why 10% of investors hold 90% of the money. The differences between an average investor and a professional investor. What makes a rich investor stand out? How rich investors make money no matter what's happening in the market. Investment Lesson 1. Invest here. According to Kiyosaki's Rich Dad, the first step is to train your mind to see opportunities that the average investor might miss. That means reading investment books, attending seminars, and building a team of accountants and brokers to help guide you. The more knowledge you gain, the better prepared you'll be for successful investing. Kiyosaki suggests starting with these 5 great books. 1. Up on Wall Street, Coffee Can Investing, I Will Teach You to Be Rich, The Intelligent Investor, and of course, Rich Dad, Poor Dad. So, let's jump into the world of investing together and discover the secrets to financial success. Investment Lesson 2. Build the foundation of wealth. First things first, you need to decide which financial group you want to belong to. Poor, middle class, or rich. Once you've made that decision, it's time to get the right education, make a plan, and work hard to succeed in that group. This is super important because it gives you a clear goal to focus on. It will also show you exactly what knowledge and skills you need, what steps to take, and how much effort it will require. Building a strong foundation starts with having a clear vision for your future and the determination to make it happen. Investment Lesson 3. Choice. In life, we all have 3 choices. Security. People with this mindset prioritize job stability. They follow the traditional advice, go to school, get good grades, and land a high-paying job. Comfort. People with this mindset prefer low-risk investments that seem like guaranteed wins. They like staying in their comfort zone and avoid taking big risks. Riches. People with this mindset know that success comes with risk. They focus on growing their financial knowledge to reduce risk and increase profits. They understand that calculated risks are key to building significant wealth. Choosing your mindset is huge because it shapes the outcome of your financial journey. Investment Lesson 4. What kind of world do you see? Now let's think about 2 different worlds. One where money is scarce and one where money is abundant. In a world of financial scarcity, people focus on job security and stability. They avoid risks, struggle to save, and live in constant financial stress. On the other hand, in a world of abundance, people actively look for ways to make more money. They keep investing in their financial education, increasing their financial intelligence. This is why 90% of the world's wealth is controlled by just 10% of people who prioritize learning about money and have a wealth building mindset. Those who focus on security, however, only control about 10% of the wealth. Understanding these two mindsets is key to shaping your financial future. By choosing to focus on learning about money and embracing a wealth building mindset, you open up a world of opportunities to improve your financial life. Investment. Lesson 5. Why is investing complicated? Investing means putting your money into things that can improve your life and help you grow your wealth. While the idea sounds simple, it can be tricky for some people because investing is different for everyone. For some, it might mean buying stocks, while for others, it's about investing in real estate or getting insurance for their family's future. The world of investing is huge and people's expertise varies, which is why everyone earns money in different ways and shares their own experiences. That's why investing is so dynamic. It's full of different viewpoints and opportunities. Investment Lesson 6. Investment is planning. Investing isn't just about buying products like stocks or real estate. It's about having a solid plan that takes you from where you are now to where do you want to be. It could involve using one product or a mix of several, depending on your goals. The key is to make a plan that will help you reach that rupee. Narpadi Rubai 50 lakh target using the right tools. Don't be afraid to switch things up and change your plan when needed. In a world full of investment options, being able to stick to a plan and tweak it when required is what makes successful investors. Investment Lesson 7. Rich plan and poor plan. There are two types of plans, one that leads to wealth and the other that keeps you stuck. Your financial future is shaped by how you plan and act. A rich person's plan involves learning about business and investments, focusing on securing your money and creating passive income for a comfortable lifestyle. Poor planning, however, relies only on a job, saving for retirement, and maybe making some small stock investments, but without growing your financial knowledge. The choice is yours. What kind of plan do you want to follow? Investment Lesson 8. How to choose the right plan. Here are 3 ways to create the right plan for you. Decide how much wealth you want. Start by asking yourself how much money you truly want to make. Get advice from experts. Talk to professional investors who can guide you and help you create a smart, informed plan. Learn the language of the wealthy. Start using terms related to business and investing. The more you think like a wealthy person, the more you'll align yourself with strategies that build wealth. By following these steps, you can create a plan that suits your financial goals and sets you up for success. Investment Lesson 9. Decide what you want to be. As we've discussed before, your financial future depends on your plan. You have 3 options. Financially secure. Make a plan to achieve financial security that supports you and your family. This could include getting insurance to protect against unexpected events. Comfortable. Aim for a life where your passive income covers your expenses. This lets you break free from working just to earn money, giving you more time and freedom to pursue opportunities that build wealth. Rich. To get rich, focus on learning about investing. Gaining knowledge in this area is key to growing your wealth. By following all 3 plans, you can create a solid foundation that covers security, comfort, and the potential to become truly rich. Investment Lesson 10. Investment is not risky. People often think investing is risky, but there are 3 main reasons why. Lack of investment training. Many people lose money because they don't have the right knowledge. Without understanding how investing works, they make poor decisions that cost them. limited control over investments. If you don't know enough about the companies or assets you're investing in, it's hard to control your investments. This makes it tough to minimize losses and maximize returns. Limited insider investment. A lot of people don't do insider investment in the stock market. Insider investing means learning all you can about a company and using that knowledge to make smart investment choices. Without this insider info, you could miss out on good opportunities. To fix these issues, it's important to educate yourself, learn about the different investment opportunities and get advice from experts or do your own research before diving in. Investment lesson 11. Reduce your risk in life with investment. When you have a job or run a business, your family depends on you. That's a big risk because life is unpredictable. The safest way to protect your family is by getting term insurance. Investment lesson 12. Basic rules of investment. There are 3 main ways to make money: active, portfolio, and passive. To build wealth, you should focus on developing passive and portfolio income instead of relying only on active income. Use your active income to invest in things like stocks, businesses, or real estate. These investments can create passive and portfolio income, allowing you to earn without constantly working. Always prioritize protecting your initial investment, consider the risks, and make sure you safeguard your original capital. Know the difference between assets and liabilities. Assets put money in your pocket, while liabilities take money out. Focus on building assets that generate income and reducing liabilities. Professional investors carefully weigh the risks and rewards of their investments. By managing these factors, they aim to reduce risks and boost potential returns. By following these rules, you'll build a strong base for growing your wealth and achieving financial success. Investment lesson 13. Increase financial education. If you want to get better at managing money, you need to understand how to read a company's financial statements. These include income statements, expense reports, and asset summaries. They give you a clear picture of a company's sales, management, and financial health, super helpful before you invest in anything. Managing your own money and staying involved in financial activities can also teach you a lot. It's like learning on the job. The more you learn, the better decisions you'll make. The key takeaway: keep expanding your financial knowledge and apply what you learn to real-life situations. Investment lesson 14. Making financial knowledge easy. Knowing how to read financial statements helps you figure out the difference between assets and liabilities. Here's what to keep in mind. Focus on cash flow. Turn your assets into cash flow. For example, if you're renting a house but not making any money from it, that's a liability. But let's say you buy an apartment, rent it out, and earn $1,000 a month. Even if it costs $200 to manage, you're still left with $800 in positive cash flow. At first, you might need a loan to buy the property, but once you've paid it off, it becomes a true asset. Or, if possible, buy a property without a loan. Either way, prioritize assets that bring in steady cash flow. That's how you build long-term wealth. Investment lesson 15. The magic of mistakes. Mistakes are a natural part of the journey to success. Trying to avoid them altogether means you'll miss out on important lessons about investing and business. This can hold you back and make life harder in the long run. A never make mistakes mindset, like the author's poor father, comes from a fear of taking risks and losing money. But this kind of thinking can keep you stuck, missing opportunities to grow. On the flip side, the author's rich father embraced a different approach. He dove into learning about finances, understood how wealthy people think, and wasn't afraid to try new things. Sure, he made small mistakes, but Each one taught him something valuable. He used those lessons to improve and ultimately succeed. Investment lesson 16. The cost of getting rich. The way you think about money can shape your reality. If you believe money is hard to come by, you'll probably find yourself struggling to earn it. But if you see the world as full of opportunities, you'll be more likely to focus on growing your financial knowledge and achieving the income you want. It's true, what you believe often becomes your reality. To develop a mindset that attracts financial success, stay humble and approach your work with the desire to help others. The more people you serve and the more problems you solve, the more likely you are to be rewarded financially. That's a faster road to wealth. There are 3 key things you need for success, called the 3 E's. Education, keep learning, especially about money management, cash flow, and investing. Experience, get hands-on experience in financial ventures to deepen your understanding of how different markets work. Access money for investment. Save up extra funds so you can invest and take advantage of opportunities to grow your wealth. By focusing on these 3 areas, you'll build a strong foundation for financial success. Remember to keep learning and adapting to the ever-changing world of money and investing. Investment lesson 17. The 90-10 puzzle. Here's an interesting fact. 10% of investors control 90% of the money, while the remaining 90% of investors only account for 10%. What's the difference? It all comes down to how they focus on building assets. The top 10% of investors spend their time and energy creating their own businesses or investments. They use their 3 E's: education, experience, and excess money to form companies, launch IPOs, and sell shares to build wealth. Meanwhile, the 90% invest much of their money in the shares or assets of these companies. While that can be a smart strategy, they don't always maintain control over those investments. How profitable these are depends on the company's management and market conditions. Many of these investors put their money into blue chip stocks, top 500 companies, or indices like the Nifty 50. While that's a good starting point, they'll need to keep expanding their knowledge about money, cash flow, and investments if they want to grow financially. The big lesson here. The top 10% focus on building their own assets, while most people rely on external ones. To boost your chances of financial success, make it a priority to learn more and keep growing your understanding of the financial world. Investment lesson 18. Solving the 90-10 puzzle. If you figured out that creating your own business is the solution to the 90-10 puzzle, congratulations, you're heading in a great direction. If you're thinking about starting your own business, begin by looking at the challenges you face in your life or the problems others are dealing with. Ask yourself how you can solve these problems and make a positive impact by adding value to people's lives. Once you've got an idea, take action and keep growing as you go. Along the way, building confidence and trust in yourself is essential. Believe in your abilities because that confidence will help you handle obstacles and make bold decisions. By focusing on solving problems, helping others, and continually improving, you can set yourself up for success in business. Embrace the entrepreneurial mindset and start a journey that can transform your life and positively impact others. Investment. Lesson 19. Types of investors. Let's dive into the different types of investors and how to manage your investments effectively. Self-control. Income. Focus on earning more, whether that's through career growth or finding additional income streams. Expense control. Manage your spending wisely by prioritizing needs over wants and avoiding unnecessary costs. Investment management. Keep a close eye on your investments, diversify your portfolio, assess risks, and regularly review your strategy to get the best results. Tax management. Understand tax rules and find ways to minimize what you owe legally. This can help you keep more of what you earn. Information management. Stay updated on market trends and economic news. Use this knowledge to make informed investment choices. Now let's look at 5 types of investors. Accredited investor. These are high-income earners, usually making over $100,000 annually, who qualify for exclusive investment opportunities. Qualified investor. These investors understand how public markets work and follow specific regulations. They are sometimes called outside investors. Mutual investor. They are highly knowledgeable about investments and have the 3 E's: education, experience, and excess money. They also know how to use corporate laws to reduce taxes. Insider investor. These investors have a direct connection to a company's management and can make strategic investments using insider knowledge. Final investor. They run successful businesses and use their profits to make additional investments. Understanding these types of investors and managing your investments carefully can help you on your financial journey and boost your chances of long-term success. Investment lesson 20. Accredited investor. As mentioned earlier, accredited investors are typically high-income individuals who meet specific financial criteria, which can vary depending on the country. For example, in the US, someone with an annual income of $2 million is considered an accredited investor. These investors usually have access to substantial financial resources. But remember, having a lot of money doesn't automatically mean they know everything about investing. While they might have one of the 3 E's, excess money, they still need to keep learning about investing to make smart decisions. It's also important to note that accredited investors often take on high-risk investments. Because they have more financial flexibility, they might go for opportunities with bigger potential rewards, even if it means higher risks. Investment lesson 21. Qualified investor. A qualified investor is someone who knows a thing or two about money and investing. They've got a handle on a few key areas. Yourself. They're in control of their own financial decisions and know how important it is to manage their personal finances wisely. Income, expenses, assets, and liabilities. Qualified investors are good at managing their earnings, keeping their spending in check, and understanding their assets and debts. They focus on staying financially stable and making smart choices. Buying and selling. They know how to spot good investment opportunities and make smart buying or selling decisions in the market. Now let's break down the 3 E's of a qualified investor. Education. They've learned the basics of money management and investing, giving them a solid foundation. Experience. While they might not be super experienced, they've picked up some real-world knowledge through their financial decisions and dealings. Extra income. They usually have a little extra money they can put toward investments or building wealth. In short, qualified investors have a good grasp of their finances and are always working to learn more. Over time, they gain experience and improve their financial skills, taking their money game to the next level. Investment lesson 22. Mutual investor. A mutual investor is a step up from a qualified investor. They not only know the basics but also understand things like tax strategies and corporate laws, which help them make even smarter financial moves. This extra knowledge can be a game changer. Mutual investors know how to build wealth, whether the market's going up, down, or is all over the place. A lot of wealthy people got where they are by operating at this level. By using their understanding of taxes and corporate rules, mutual investors can make better investment choices and potentially see big returns. This know-how helps them take advantage of opportunities and handle market ups and downs like a pro. Investment lesson 23. Insider investor. Insider investors have a unique edge. They're actively involved in managing and making decisions for the company or asset they've invested in. It's like running your own business or being the biggest shareholder in another company. This kind of control gives them deep insights and a say in how things operate and grow. Many insider investors think globally. They invest across borders, giving them access to a wide range of opportunities and helping them build a diverse portfolio. Like other types of investors, insider investors also follow the 3 E's. Education to keep learning and sharpening their skills. Experience from being actively involved in investments. Excess money to invest in their goals and expand their assets. Investment lesson 24. The final investor. The final investor is someone who creates something so valuable that it reaches millions, think Bill Gates with Microsoft. These investors build massive companies that attract other investors. They not only manage their own investments but also influence how others invest. And yes, they have all the 3 E's to back their success. Investment lesson 25. How to get rich slowly. Here's the secret to building wealth over time. Start by saving your money and putting it into assets that generate monthly cash flow. Use that cash flow to buy another asset. Keep repeating this process so your income keeps growing. For example, buy a house and rent it out. Use the rent money to save for another house. Rent that one too. Keep building your assets step by step until you reach your financial goals, whether it's buying more property, achieving financial freedom, or creating a legacy. It's all about staying consistent and letting your assets work for you. Investment lesson 26. How to become rich while working. Here's how you can build wealth while keeping your job. Start a part-time asset. Use your free time to start a side hustle or part-time business. It's a great way to create additional income streams. Learn the skills and laws you need. Spend time learning important skills like communication, leadership, and team management. Also, get familiar with tax and corporate laws. The harder you work on these, the faster you'll see success. Investment lesson 27. A burning desire to be an entrepreneur. To become rich, you need a strong desire to be an entrepreneur. Here's how to ignite that passion. Save money for investment. Remember, every dollar you save is helping you earn more. Skip unnecessary expenses like movies or nights out and focus on building your future. Start a business ASAP. Even a small business that solves a problem can set you on the path to success. Keep improving your skills. Work on your 3 E's and study financial statements to grow your knowledge and confidence step by step. Investment lesson 28. How to start a business. Here are 3 reasons to start a business. To earn cash flow, build a business or invest in rental property to create steady monthly income. To sell it, you can build a business and sell it for a profit, then invest the money in assets that generate more cash flow. To go public, start a company that solves a real problem and eventually issue an IPO. This way, you can earn income when people buy shares of your business. Before starting, decide which reason drives you the most and make a solid plan to achieve it. Investment lesson 29. Cash flow management. Just like your body needs blood to survive, a business needs cash flow. It's essential to start generating cash flow from day one. Always focus on keeping it positive. Many new businesses fail because they don't pay attention to this crucial aspect. Daily cash flow is critical to keeping your business alive and thriving. Investment lesson 30. Communication. Management managing. Communication is key to running a successful business. Here's what to focus on. External communication. This includes sales, distribution, customer service, investor relations, and public relations. Internal communication. Share successes and failures with your team. Hold regular meetings with employees. Stay in touch with advisors and develop strong HR policies. Investment lesson 31. System management. Create a clear, automatic system for everyone's responsibilities. Your system should cover areas like daily, office operations, product development, manufacturing and inventory management, order processing, billing and accounts receivable, customer service, accounts payable, marketing, human resources, general accounting, corporate management, physical location management. Having these systems in place ensures everything runs smoothly and efficiently. Investment lesson 32. Legal management. It's essential to have the right legal documents to protect your business and secure intellectual property rights. This protection can save you from losing everything and also allows you to license or franchise your business, earning royalty income. Talk to a legal expert to help with areas like corporate laws, consumer laws, intellectual property rights, and shareholder agreements. Investment lesson 33. Product management. Your product is the heart of your business. It's what the customer ultimately buys. A good product brings in cash flow and keeps the business running. So, always focus on making your product customer-oriented. A successful business system doesn't just make a great product, it ensures it's delivered to customers and generates profits. Think about it. Plenty of people might make a better burger than McDonald's, but few can create a better system. Conclusion. Robert T. Kiyosaki's Rich Dad's Guide to Investing offers powerful advice to reshape your financial future. By learning the difference between assets and liabilities, improving your financial intelligence and planning strategically, you can take charge of your finances. Investing isn't just about money, it's about having the right mindset, learning continuously and taking smart risks. With the insights from this guide, you're ready to start your journey toward financial freedom. Invest wisely, let your money work for you, and good luck. Book review: Rich Dad's Guide to Investing by Robert T. Kiyosaki is packed with practical insights about investing. It focuses on financial literacy and mindset, encouraging readers to challenge traditional thinking and take control of their financial future. While it doesn't dive into specific investment strategies, it's a fantastic starting point for building a long-term investment mindset. Our journey with this video ends here. If you want to purchase this book, the purchase link as is available in the description. Don't forget to like and subscribe to our YouTube channel, Minibook, and follow us on Facebook as well, because we will keep creating similar videos for you regularly. See you in the next video. Until then, stay happy and keep smiling.